Hello and welcome once again to TD Ameritrade on Twitch. Today is Wednesday, September 9th, 2020. I'm Anthony Panzica. That's
Bill Ruby.
Bill Ruby back from the beach vacation that we had him on last week. We're also joined by Producer Obi. What's up, Producer Obi?
How you guys doing?
Pretty good. Pretty
Doing
good.
well, doing well. I like the picture of you walking out into the abyss. Was that did that happen on this vacation, or was that?
No, that was a while ago.
Is that from your Tinder profile? Where'd you get that picture?
What?
Was that from your Tinder profile? Where'd you get that one? Maybe to show you like the back half of
not.
that nobody gets to see in the stream.
I think I should have maybe, I had a little staycation, so maybe I should try to get one of those, walk into the ocean,
You need to go anywhere?
No, I didn't. I stayed.
Sometimes, Anthony, you just need a little R&R.
Yeah, but I'm saying he could have done the show. I'm just saying.
Well, we wanted to give him a week off. Let him clear his mind. Gave us a chance to roast him a little bit. Hey, Burnt Toast 71, how you doing?
You question my work.
But we have a little bit of a change up in the markets from yesterday. What are we looking at?
Well, it's turning into a big update. Right now, the SPX is up 79 to 34.10. We got the Dow up 630 to 28,131. And the NASDAQ is up to 11,137, up 289. So that's kind of screaming back. I think it was even higher earlier in the day, if I'm not mistaken. But
yeah. Well, I had a conversation with a couple of people this morning, even on Fast Market. We talked about it a little bit, and obviously the last few days have been down, and there's two ways to look at that, right? Is this the start of a bear market, or is it just a small bump in the road on our way back up again? And now we've seen this, right? This isn't the first time we've sold off during this bull market. I mean, the most notably was back in March during COVID, and obviously we saw record highs after that. I don't know, Bill. I mean, what do you think? What are your thoughts on it? Obviously not a recommendation, but are you seeing anything in any of the technicals that indicate that it might be either we're entering a possible bear market, or is this just another bump in the road?
Well, that's actually what I was going to touch on. Hey, Bird Toast, troubled gaming, vacation was great. Thanks for asking. That's actually what I was going to touch on. I think there are some big technicals that we did tap specifically yesterday in a lot of the major indexes. In the ES futures, we kind of tapped those and tested them. Seems like we're bouncing off of them. I think now is kind of a holding period. Are we rallying now because we bounced off of those? Or is this just like, a dead cat bounce, right? I think that's a little bit of an exaggeration to use that phrase here, but the sentiment remains. Like, had a big couple of down days, and now we touched support, and now we're starting to rally a bit. We're getting a strong rally, but a lot of the big names haven't, or I haven't looked in the last like 20 or 30 minutes, but they haven't even broken yesterday's highs, which is kind of from a technical standpoint, that's kind of a big deal to me. Where if you can test those highs and eventually break through them and predominantly settle above yesterday's highs, that can usually mean that you're out of the woods at least for the next day or two. But we haven't seen that yet, and of course we're gonna have to wait until the close to figure that out.
Well, why don't stocks only go up coming in from Lubal? Well, you know what? You wouldn't actually. That's an interesting thing he says there. I don't think you'd want stocks to always go up, right? I mean, nope. If they did, they would become predictable, and anything predictable usually isn't worth doing. That's one thing. And then the second thing is, if stocks only went up, it would be too expensive for anybody new to ever get in.
Right? Yeah, and I mean, entry point wouldn't matter. I mean, I think that'd do a lot of weird things to the dollar too, to be honest. But
so you guys gotta tell me when my hair is cut out of the stream, okay?
I actually prefer it. So, well, hang on. We didn't say hi to our new followers. Let's do that real quick. Lubal, Himalayan Sage, Fortunate Turn, Gordon Graves, Ulysses. You guys see how good I'm doing with these so far? Dr. Rammer, Cody Watkins, Oswego Tony.
Hey, Oswego Tony.
Ed Flicker, Queen Kelly, James R. Cleveland, Florida ABK, T-Mac, Danny D-Dog. I got to scroll down here. I got a few of them. Amplified, Say, Taurine, Brata, Shirley, 236, El Africano, Alization.
Oh, it was close. You were pitching a perfect game there, Bill.
Yeah, I know. Dominion YXZ. I mean, did you guys see Lou
And
Dog?
then Lou Dog was probably the last one from last week.
All right. So, as always, thanks for the follow. Thanks for coming in, guys. Much appreciated.
For sure, guys. Thanks so much.
I think the screen is. I mean, my stream is frozen, but whatever. Okay.
We could see you fine. How many followers are we up to now?
We are up to 891 followers.
891. We
Yeah,
can do 1,000 by
we can get there.
the new year. We can do it. We can do this, guys. We're not asking a lot.
I think so.
Okay.
MJ2 Light, we are here. Good to see you as well.
Yeah, we might have to have Bill, give out dollar bills to everybody that joins. But you know what?
Dollar bill.
On that note, I do have to go through a few ground rules, and then we'll get into some more technicals. The information presented in the stream is for illustrative and educational purposes only. It is not intended to be investment advice or construed as a recommendation or any particular investment or strategy. Bill, I, and Producer Obi are not analysts, and we cannot provide opinions on specific stocks or their performance. No ETFs. If we discuss ETFs, the stream cannot be archived. Please follow the chat guidelines located below the video player on our Twitch page. And if you choose to shadow trade us in your paper money account, that is fine. However, any trade you place in your real money account is your decision alone and is your responsibility to evaluate and manage. So, I was on Fast Market, this morning, and we had obviously Kevin Hinks is the co-host of that show, and he's been a guest on our show as well. And he brought up something that's very interesting. And he brought it up on all three major indices, and we did bounce right off of the 50-day moving average, almost on the letter.
Wait a minute.
So
are you talking technicals?
Technicals.
Are you talking technicals?
I think Kevin Hinks is less technical than me, and he would probably even admit that.
Well,
he is not a technical guy, but like something like that, you can't help but to pay attention to. Right. And again, I always ask the question, is this a bunch of people paying attention to those technicals, trading off those technicals, and actually creating a situation where you see bounces like that? Or is just a function of the market and how it works, or both? And we've had this discussion, Bill.
Yeah, oh yeah, I mean we've touched on this quite a bit, and this is the thing that's been so hard to rectify with the rally that we've seen since March. Like the 50-day moving average is, in a what I would call a regular market, it's going to be getting tapped all the time. It's just like little bounces off of it, maybe crossing over back and forth, in so many symbols and so all these indices. Look how long it's been since we even touched it, right? So, I mean, I think there's a large reinforcement of that kind of self-fulfilling prophecy that we talked about, because it's been so long since we've touched it. And I think it probably carries a little bit more weight, a little more oomph than it would otherwise, just because it's been so long. This is the first technical indicator. I mean, the 20-day, probably ran right through that. That might even, if you put the 20-day on there, that's probably where we had that little, slowdown period on the first day of the break. But I think there's probably a little bit more emphasis on those right now, because these technical traders are finally getting to, enact some of their theories. Now, that being said, that doesn't mean that, fundamentalists couldn't come in and just slam it right back down, because I was on Fast Market yesterday, and we also talked about, we didn't talk about the moving average, but we talked about how, there's a lot of fundamentals and, kind of lofty valuations for a lot of these companies, considering where they've been and where they might be going in the next, last 6 months and, the next 6 months, just still dealing with the shelter in place kind of thing. But I think there's a lot that still could be moved based on that, but the technicals yesterday and today seem to be winning the day.
And that's kind of what Jack Forknife is saying, right? He's saying basically earnings don't mean a thing, that these valuations are kind of getting lofty and out of control. But at the same time, as a trader, I mean, why fight the trend? Why fight the momentum? It's like, and I use this analogy.
Well, maybe that's what this is. Maybe it's just a break in momentum.
It possibly, right? But, it's like, I used the analogy last week. If you're a cage fighter, anybody who watches MMA, or anybody that plays sports in general, whenever you see your opponent has a weakness, you exploit it until it stops working. Until they adjust, then you have to adjust afterwards, right? Now, during that adjustment period, you're going to take a lump, right? You're going to get nailed. You just got to make sure your wrists are fine during that so you can weather that storm and look for maybe a new pattern, new trend, and put together a new strategy if necessary, right? And I think that's what a lot of people are asking themselves right now. Do I need a new strategy because the market is turning? Mm-hmm. Or do I go back to the old one that was working for so long and hope that we get that same carry through gradual, bull market type of pattern?
I think you could argue that it's going to be somewhere in between. I think there is still there's a lot of hunger for this market. It seems like there's certainly a lot of velocity. So people are definitely getting involved in a lot of these moves. But also, I mean, this is also a changing landscape. I think, COVID is still an issue, but perhaps we know more about it. We've got an election coming up. There's more turmoil to come, it seems, with the China talks. So a lot of these issues are the same, but we're not paying quite as much attention to them as we were at one point. But also, I think you can never understate an election year. I think there could be a lot of volatility. There could be a lot of uncertainty, a lot of big shifts based on news. So there's going to be more and more of that coming in the next 2 months.
So Producer Obi's got some nice little charts up there, huh? Look at that 50-day moving average. I'm assuming that's the blue.
Yeah, so we got the purple here's the 20-day, the blue is the 50, the orange is the 200-day. And, a couple things about trading moving averages, and we actually talked about this a little bit back in the episode where I was technically the guest talking about futures trading. There's a trade that some futures traders like to make called the moving average fake out. And the idea behind it is if the price breaks the moving average, so in this case, today, as you pointed out, the 50-day moving average was broken, but then it immediately sort of snapped back. A lot of futures traders will use that as an entry point and then use the bottom of the candle as the stop price. So in this case, if it went back above the 50-day around 33.05, they would place their stops, looks like right around 32.90, 32.95. So they're risking 10 S&P points to see a snap back up. And if you see, we've gone up 111 S&P points from that 50-day moving average. So if they're wrong quick, and they're only risking 10 handles to see what they've potentially made here, 100 handles. That's a great risk reward, 10 to 1, right? So, and you can see.
I would say it doesn't typically work like that.
No,
like
but
I said earlier, it's usually on a 50-day or something. You'll usually see it like go back and forth a little over the line. We haven't seen that in a long time, but yeah, this is definitely a dramatic example, and it looks like it would have worked great.
Yeah, and really it's just pointing out one of those trading opportunities, and the title of today's episode is swing trading, right? Like we're in sort of this choppy range. You're looking for a short, quick winner where you have very small risk for potential of very big reward. And, if you're wrong this much a few times and then you're right once that's good risk reward as a futures trader. So I think to answer your question, Anthony, there's probably some large size futures traders that are looking at those levels. But I think a lot of quants have programmed some of that basic, mentality into their algorithms. And if they're wrong, they're wrong, and if they're wrong, they're out quick. And you can see that, we did get a bounce off the 20-day last week, and that didn't hold. And so if anyone had their stops below the 20-day, that could have been sort of a trap door that started that second leg of the sell-off. It looks like the 50-day is held today, and now we're sort of this price level we have on the screen That's our old highs from before the sell-off. So we have this area of congestion now. Can we break out of it? And then to Bill's point, can we close above the high from yesterday and potentially start a new uptrend?
Yeah. Right. And I mean, I think you could also see a little bouncing off that 20-day too, since we're in such a, we're looking at a shorter term. Like we're about to touch the 20-day. I think you could see a drawback off that. So, like I said, I think today is kind of a holding period between moves, and it's hard to. It's really this is the area where, I mean, if you call it right, if you call up and down, this is when you probably make good money in the long term. But it's still very hazy, and you've got to kind of use all those tools at hand to do it. But V Slater, Techni Sawada, Handle 1933, Lubal, thank you for the follow, much appreciated. And
thanks, guys.
I did want to say something to Randcorp real quick. We can't really like, we're not analysts, so we can't really choose stocks for you. If you had a stock, we could look at it and talk about different angles and maybe pull up a chart, but we can't really like recommend a stock at all. So
basically, Randcorp, we would love to answer your question. We just can't because we can't make any recommendations or talk about stuff that we would buy or not buy. So we would love to, but we can't.
Yeah. So we do have a couple of positions we do have to go ahead and manage.
Yeah.
So what are we looking at first before we're going to go into some swing trades and put on some swing trades, but we have a few positions here. So kind of walk us through walk us through from the top, Producer Obi. What are we looking at here?
Okay, well, we do have that Carnival Cruise Line position that's 30 days left for along the 2040 call spread. I think that was just kind of a hope and a prayer trade, Anthony. That doesn't look to be working out at the moment. Cisco, we have to manage. We have that poor man's cover call. We've rolled. Now let's just take a look and get our numbers on Cisco.
This is the greatest trade of all time.
We did it twice. We love. We hated it so much we did it twice. Okay, so we initially started this off as a diagonal poor man's cover call. We bought the SEP 45 call, which we still own, for $365, and we sold the call against it for $111. We did that went off free and clear. So so start doing the math for us. We have $111. Then we sold the. Then we sold the 42.5 call for 31 cents, which we rolled for a credit for 25 cents. We rolled for another credit for 30 cents. So add those three up. We've got 30, 55, 86 plus $111 would be $197 in credits.
Okay.
And our cost basis on the long call was 365. So here we are. Our short 42.5 call expiring in 2 days is trading for a penny, basically zero bid at 2 cents looks like, or zero bid at 3 cents. So the question is, how do we roll this out one more week before this long call expires? So let's take a look at the Cisco option chain.
Well, I don't think we can roll it out another week because this would be the last week, because next week the long call is expiring.
Can we roll it? Can we roll it into a vertical spread essentially?
We can. That we can do. We can sell an upside call.
What's our call? Our long call?
Our long call is the 45 call, which right now is trading 2 cents. It's trading for 2 cents. We are short the 42.5 call. So really, the only way we're going to get any premium if we roll this down and out. Is if we go down to like the 41.5 call, 41 or 40.5.
And then we'd still be behind on the trade.
It's terrible.
I mean,
yeah.
I don't know. This is great. All right. I mean, honestly, at this point, it doesn't look like we're going to get our premium. We'd have to pinch up right against the at the money in the last week when it's super reactive, when you've got very reactive gamma. I'm okay. I mean, tell me what you think, Anthony. But what do you? I'm okay with just taking this off and cutting and running. I mean, we've cut our loss down to about, what was it, 140 now, down from three and change.
Yeah. I mean, there's nothing to get rid of, right? I mean, the long call's 2 cents, just leave it, right? The short call, we might want to just close it out. Yeah, I'm a fan of just like, you know what? throw in the towel again on this and say bad baby and never do it again.
So basically we're gonna let's take off the 42.5 call. We'll hold on to the 45 call. Maybe we get.
Yeah, JP Lopez knows exactly. I mean, he's hearing about this too.
All right, so we'll get out of this for 2 cents. Leave on the long call for 9 more days. Maybe Cisco gets a pop, and we can.
Lottery ticket there.
Yeah. So that takes care of that. We did some trades last week, Bill, while you were away, although you may have been watching. We don't know. We can't confirm. We have the Dick's Sporting Goods position where we originally were long 5 of the 55-60 call spreads. We sold 5 more of the 54-55 put spreads to collect some premium against that, and sure enough, Dick's is rebounded up $2.23 today, trading at 56.40. So we're in between our 55-60 strikes on the call side, but the put side is basically trading. Let's see what it's trading at for 23 cents, and we sold that for. We did that for 45 cents, so about half the value's out of it, plus we're getting some value on our long call spread. The long call spread is 9 days. The short put spread is out in 2 days. What do you guys want to do with that short put spread?
You know what? I'm thinking, because this is the long call spread expires next week.
Yep.
I'm thinking we just ride out for the rest of the week on the put spread. And then next week we're just going to ride that out. I mean, it's either we close the put spread out or we just let it ride. I'm a fan of just letting it ride. What's the short strike at in the put?
$55 is our short strike.
Yeah, I think we should just leave it and then ride that call spread next week and hope we get a pop because we've collected a fair amount of credits on this thing every week.
Well, no, I think we've only done 2 trades on this. We initially bought the vertical for $1.45. We sold the put vertical for 45 cents. It's trading for half value now. The call spread is trading for $1.92. So we're up about 45 cents on the call spread, and we're up about 20 or so cents on the put spread. And we did it 5 times. So for the entire position, we're up gross $337, kind of floating around there now. So if we're gonna hang tight, we can look at this next week, and then we can keep an eye on this put spread off stream if we have to manage it tomorrow or Friday.
What do you think, Bill? I think we leave it.
I mean, it's only $1.40 away from being in the money, and it's up. Stock's up $2 today.
Yeah.
Plus, this is a range bound thing. I think even naturally, it could come back more than $2 in the next 2 days. If you're up $20 and we're squeezing 22 cents out of it, how wide is that spread? Oh, it's only $1 wide.
Yeah. All right, let's.
There's 5.
I don't know. I mean, maybe take it off. I don't know. I'll leave that up to you, Anthony.
Take off a couple of them.
Yeah, that's a good idea. That's a great idea.
All right, so you guys want to take off
you want
to take off 2 of the put spreads.
Yeah, just take 2 of them off.
Okay.
That's a good thing about doing quantities of a few is that you can scale in and scale out, and I'm always a fan of that, especially with no ticket charges now. Gotta love that.
Yeah, and we'll go. The spread's a little wide. I put it in at the mid price. We'll see if the paper money market makers fill us, but those orders will be working. Next up, we've got JP Morgan expires in 2 days. We are long. We are short the 99-100 put spread. We did this for 49-cent credit, so it was a 1-pointer for roughly 50 cents almost. Right now, the spread, we are up on that. The spread's trading for 23 cents. So once again, about half the value gone. 2 days left. Basically the same situation. Stocks almost identical, about $1.30 above our short put. So stocks trading 1 to 130. Our short put's 100.
You could kind of do the same thing there. I mean, just take off half of it.
Yeah, this one, a very similar situation. Up day coming off after you already busted through the short strike. It's rallying a little bit, but it looks extremely range bound over the past month or two. Right. I mean, I think that's probably a solid move.
And we're literally going in at the same price too, going in at 23 cents. It was almost identical markets. 30 cents on the offer, 23 cents mid. So that's working. And then we've got we're filled on JPM. So we're out of 2 of those down to 3. Kodak, really nothing to talk about. 128 days left. That one's slowly whittling away on us. Workhorse. This one is turned for us pretty sharply. We originally started out with buying the 1722 call spread. Last week we sold the 17.5, 18.5 put spread to add more premium to that. Now the stock's trading at 22.96. So we are through our long call spread, our short strike on the long call spread. Basically, we're up about $1,000 on this position. The short put spread is trading. Let's see what this is trading at. It's basically worthless. So if you want, we can get out of the short. We can buy back the short strike and just sort of close that risk out.
Yep, I'm a fan.
Yeah.
Now it's we have to pay for it. We're gonna pay a little bit for it, but I think that takes off our risk on the downside.
Whoa! Why don't you just buy back the short leg? What's the short leg trading at?
No, we got an out trade. I meant to buy back the short leg. My fault.
It's in Obi's error account.
Yeah, put in my error account. I was going to, and we can, it's paper money. We could adjust that, but we'll just take the out trade. We bought it back, the whole spread back for a nickel.
Hey, but what was the short leg trading at too? Because I'm curious. That's not necessarily the right move. I was just curious about it.
The 17.5. Let's see. This was in this week's nickel bid at 10 cents.
Yeah. I probably would have bought back, especially because it's so volatile. But I mean, no harm, no foul. I mean, who knows? That would have been crossing your, a little.
Well, what I'm saying is I would have bought back the short strike, the 18.5.
Exactly, and then
taking the risk on the put spread out.
Yeah.
But we're fine. So now we got the long 1722 call spread. 9 days left on that. The stock's trading at 22.87. We did this originally for $1.20, and we did it 4 times. And right now the spread is trading for $3.35. So more than a double. Actually, yeah.
Yeah.
So you want to take off half? Or do you want to let it ride? What do we want to do?
I say take it all off.
Take it off? Anthony? I mean, it was a nice trade all around.
Hang on. Where's the stock trading?
Stock's trading 22.93.
22.93. It made its high yesterday. All-time high of 23.85 looks like. I mean, I guess I don't have an all-time, but I think this is an all-time high. There's a 52-week high for sure. 23.85. We're in the range.
How much are we up?
Well, on just this position, we are up $840. Plus, we just took off our put spread. So I think for the whole position, we were up around 1,000, give or take. So it's might as well. Why risk a snapback when we got what we wanted and we're just about a week early?
Yeah, sold.
Oh, Unwilling Fold, thanks for the follow. And all right, I'm gonna give this a shot. 0xW4E2E OD69. Thank you for the follow.
Thanks for the follow, guys. And then V Slater, if we didn't get him.
Yeah, we got V Slater and Server Spade, unlikely PR maybe. Thanks for the follow. Much appreciated. All right,
okay.
Let's get something on.
That takes care of our positions. We're talking swing trading, guys. So I guess, Bill, Anthony, how do you define swing trading if you're explaining it to a 5-year-old?
Trying to buy low and sell high short term.
Short term.
Not in the same day, right? Because that would be a day trade, right? And
I mean, swing trading could technically be day trades, but you'd have to have your account over 25,000 if you're doing it regularly.
Yeah.
But I mean, yeah, I think swing trading does typically carry the connotation of like maybe a day or two, or that you hold on to it, maybe 2 or 3 days.
Mm-hmm.
I mean, day trading is a different monster. I know when I was on the floor, I talked to my bosses about this because it was an intriguing. I was a young, sprightly fellow, and I was, trying to.
You saw the way I looked at you.
Intrigued by day trading because you never had to, you don't have any risk on overnight, right? So it's, day trading sounds really great. It's you don't have to sit up all night looking at your futures and being worried and sweating it out and be like, where are we going to open tomorrow? The predominant, what I would call the predominant, thought on it is a lot of people try it and almost nobody's good at it. My boss, who'd been in the industry for 30 years, he said, I've known a ton of people come in and out who are day trading, and I think I only know one who could do it very well. And that's over 30 years experience, much more than me. So I think it's a tough game, and I think it can be done for sure. But I think you got to really be on your toes and know able to do it.
Okay, so
very good. So they're going the other way.
Well, it looks like we got some friends from probably, I assume, some kind of Reddit joining us. Welcome,
sure.
welcome, boys. Read the
coming in.
rules, have fun, but don't be, I won't use
He's
the
the
word.
demigod, GA boy, Outcast 11,
Yeah.
B West Trust, Gambler 247, Roycian. Thanks for the follow.
Yeah, thanks for following us, guys.
B West Rush. Let's
have a mod.
Let's keep it clean. When's the next toss crash happening? I don't know. What's your account number? I can make it happen right now.
Hey. It's a demigod. We do have a mod, and we will mod appropriately. So just once again, guys, read our chat guidelines. Please have fun. We're not here to, we're not here for your amusement.
What are we putting on?
All right. So
let's go Tesla.
Well, that's a.
I love Tesla. And by the way, I'm just going to kind of interject this. According to Investopedia, the definition of swing trading. Swing trading is a style of trading that attempts to capture short to medium-term gains in a stock or financial industry over a period of a few days or several weeks.
Oh, is that right?
Yeah. So
what I wanted to point out to you guys, if you look at the S&P, let's just say we were trading S&P futures, right? If you go, right now I have a 20-day 1-hour chart. So if you go back before this sell-off, you go kind of like the last sort of big down day, you had this really nice steady trend for about a period of 2 weeks. And had you found a good entry point to get in, essentially utilizing certain indicators, and we've talked about them before, like pivot day moving averages, pivot support ranges, you slowly sort of bring your exit point up along with the trend, and then you're out, probably in this big sell-off that we got last week. So Deesher Wood Mathman says, I call it monkey trading since you are swinging from day to day like a monkey swings from tree to tree.
That's true.
Okay. All right. Yeah. All right. I can see it.
So easy. Even a monkey could do it.
Well, Orlando Boom says how accurate are indicators. Obi was just touching on indicators. It almost seems like you can predict where the trends go. I say that's only sort of true. I think you got to get really good at a few different indicators in order to do that. Like indicators, have like a personality and a feel, just like a stock itself, right? So if you get really good at watching 1 or 2 or 3, that's when you really can start to take advantage of them. There'll be times when they're wrong or they're giving you false signals. The more you get accustomed to that, and you can call those signals out and kind of move around them or ignore them when you know it to be a false signal, and when to really pile on when you think it's giving you exactly what you need. That's when you get really good at reading indicators. And I don't know. I mean, I don't think there's that many people in the world like that are good at reading all the indicators. It's really just the select few, or maybe 3, 5, 10 at most that they're really good at, in my experience.
So here's the indicator I was talking about, that 3-day pivot range. We talked about this in the futures trading episode. 3-day pivot range, look it up, guys, but it's essentially creating a range based on the high, low, and close of the last 3-day period. And there's a few calculations that go along with it to give you your range. But in a choppy market, let's look back at the beginning of this period, right? If you would have used this sort of as potential support, and you tried to maybe buy when one of these levels were hit, you would have gotten stopped out a few times along the way. However, when you have a really strong trending market, maybe you got in when it crossed back over that 3-day pivot range and you put your stop at the bottom of this range. Basically, you could just drag your stop up to the bottom of the range each day. And when you have that strong uptrend, this is where, okay, maybe you get stopped out right there. Maybe you gave yourself a little more room, but eventually when it crosses back over that 3-day pivot, that's what gets you out of the trade. So this would be an example of using a simple indicator, in this case the 3-day pivot range, to identify an area to get in, but also where to place your stop if you're wrong. And if the market's moving your way, using the bottom of that range to not get out early, and try to take out as much profit from, in this case, a swing trade of looks like about 2 weeks.
Yeah. Do you guys want to put on a swing trade in the S&Ps?
Let's do MES. Let's do like a 2-lot in MES. 2
lot. Okay. Well, if we want to use this indicator right now, we would probably wait. But since we're on stream, we kind of have to make a decision. We would wait to see the price test this tomorrow's pivot range. Right now, it's absolutely in the middle of our 3-day pivot range. And if you look at this trend, since the sell-off started last week, it's tested it once. It's tested it twice, and now it's testing it a third time. So we either think, are we based on what we talked about earlier in the stream, are we in the start of a new downtrend, or is this the reversal point? And this is where we either can potentially sell a future and put the stop above the range if we think we're going to sell off, or do we want to maybe think this is the bottom, buy it, and then put the stop right below the bottom of the pivot range?
If we went long, where would you put your sell stop?
So say that again. If we were buying,
if we went long, yeah, where would
you would put it at the bottom of the pivot range, because what you're assuming is that when the price is above the pivot range, it acts as support. When the price is below the pivot range, it acts as resistance. And you can see it's going to pierce this pivot range and test it. So your stop would be above it if you were selling, and it would be below it if you were buying.
So what's the stop? Why don't we just put one in both ways? Why wouldn't we do that? We're right in the middle of the range. If it breaks out either way, we've got a trade on. Put in 2 OCOs.
So you're saying buy here,
OCOs?
Yeah.
Just 2 stops, a buy and a sell stop, and if it triggers, they cancels the other and just ride the momentum.
Well, we can't do that. We can't do that because you can't trigger off a trigger, right? Which would be OCO into a stop. You can't do that. But you can do
2 stops, a buy and a sell stop OCO.
Yes, absolutely. We could do that, but then we definitely have to manage it. We'd have to watch it because it couldn't trigger a stop, which is usually what we like to do. I'm especially in any futures, even MES, which is a smaller contract. I think you always got to have a stop on. So we just got to watch it, make sure when we see a fill, we'll choose this an exit point to put our stop out.
Yeah, I agree. What do you think, Producer Obi? Or do you have a bias?
I don't have a bias. I think if this was a real trade, and Zarengal, I'm just going to share with you the link. There is math behind this. Look up Mark Fisher ACD 3-day pivot range, and you can find the math behind it. But it's just a mathematical calculation of the high, low, and close of the last 3-day period, and then there's a few other calculations. You take the high, low, divide that by 2, and basically I just shared with you the share link, so you have this study now. But if we were doing this for real, guys,
why don't you show everyone where to put that, by the way, too, Obi?
Yes. So if you're on TOS, guys, and you if you go to your setup here, open shared item, and just paste in the link, and then hit preview. Basically, you'll import this into your studies, and then you'll get a message like this. It's been saved from Twitch at SEP09. You can rename it, but go into your studies, and then you see from Twitch, and then you can just change this, edit. You can rename it, so on and so forth. So then just load it into your studies. It'll show up in the price field, and apply that, and you'll be good to go. You can change the colors however you want.
Thanks for the follow at 1:40 p.m. Appreciate it.
Yep.
August.
But guys, if we were doing this for real, this would kind of be a no-go territory. We're in the middle of the range. We would want to wait to see if price broke through the 3-day pivot range or failed. I think what Bill's saying is, why don't we put a sell order here and a buy order here, if it gets filled, then we can place the stop accordingly. But in theory, if it broke through, we would buy up here and put the stop below here. Now this is a pretty wide pivot range. If you actually look at the numbers, the high is about 34.57. The low is 33.78. So that's a pretty wide range. That's 57.
That's really wide.
That's almost 80 S&P points. So if we're doing this on minis, that's a $400 range on the minis.
Right.
Orlando
Boom.
Boom.
That's why I think we should do a lot of the other one.
Orlando Boom. We do save them on Twitch and YouTube. TD Ameritrade has a YouTube channel. Subscribe.
And Wegwoo, thank you very much for that compliment. Appreciate that.
Unwillingful, why would you trade futures during market hours? LOL. Well, that's when you have the most liquidity. So if you know anything about futures trading.
I mean, in trading overnight in any product, even like something like ES, I mean, it thickens up overnight internationally a little bit. I think at like, 1 in the morning? 1 in the morning.
It's always pretty liquid.
Unwillingful, most futures strategies and most strategies that involve indicators and whatnot work best when there's liquidity and volume, and overnight there just isn't. So keep that in mind. Just because the stock market is open, the stock market is open doesn't mean people aren't trading futures on the indices. So keep that in mind.
Yeah. I've noticed some of the the overnight trading in the S&P. It is lighter volume, but it's liquid for a smaller trader, but it's choppy. So that's you got to be really.
Oh yeah, absolutely. And you'll see really wide bid-ask spreads, like 1 or 2 points for the ES, which is
I haven't seen that. Bill, I have to be honest with you. I haven't.
On a big move, like what? Remember that night that like the S&Ps went down like 60 and then went back up 60 an hour later? When was that? Like a month ago, or you were seeing that like.
And now were you okay?
Yeah, just like on those big moves, on those wide jumps, like the bid will drop out, which and I'm talking for a quarter of a second or something, but that just would not happen during the regular session.
Yeah, never.
Well, here's another thing to keep in mind, guys. If you see the study, it is calculating tomorrow's 3-day pivot range because it's taking in the high and low from the last 3-day period, and it's using the current price as the potential closing price. So as price moves up and down, you're going to see this line is floating with it. But what I want to point out is, if you notice, this is a really wide range. We'll just call it almost 80 points. Yeah. But tomorrow's 3-day pivot range is actually really tight. It's only about 18 points. Something that tends to happen with this 3-day pivot range, the tighter and smaller it gets, it tends to result in a day coming up that is going to be more volatile than previous days, because essentially the market is consolidated and it's either going to go or it's going to fall. So this is once again
like if you're looking at a longer term chart, like 2 or 3 days. I guess you could qualify this too, but just not looking at pivots, like that pennant formation. It's a technical thing where you have a wider range. Well, I should do this way: wider range, smaller range, smaller range, smaller range, and then a lot of times you'll get an explosive move, either up or down. Same with like an ascending triangle or a descending triangle. Yep. Usually it comes with a big dump on a descending and a big rally up on an ascending triangle.
Yep, and what's very interesting is the 3-day pivot range is actually bracketing our old highs on the S&P. So now we've got two price levels that are giving us more conviction in terms of, is this actually something to keep an eye on? Now, if we were to layer in moving average, maybe that 50-day moving average isn't far from here. So you can see as you start putting in a confluence of indicators, you could have potentially more confidence in the level as being important. Let's see, we had something there. Why not MES? Unwillingful, we can look at MES, but just for charting purposes, ES and MES are basically the same. When we place the trade, we can decide which instrument to use.
Couple new followers there, Bill. Why don't you name them off for us?
We got Bushy, the lover, and 1:40 a.m.
Something's going on with Anthony. Your camera is all messed up. I don't know what's going on.
I don't know what's going on either. I can't control
It
that.
looks like, did you like put a screen at, like the Skype screen or something? I don't know.
I don't know what's going on.
Eric,
Is it still doing it?
Let's see. Let me
Is it like
switch out.
following my face?
It's something with your Skype. Let me look at it. Yeah, that's
yeah, I mean, okay, while they're doing that, I could talk about delta neutral trading for a second. Looks like
Have to sabotage me as a host.
oh, it's coming back.
all right, well, okay, so delta neutral trading is when you're trading an option, right? It's going to have a delta. Every option has a delta. Because it's delta neutral, you know that you're talking about trading options, because you couldn't be delta neutral with just the underlying unless you don't have a position. It's when your delta is 0. So every future has a delta of 1. And every option will have a different delta. What you're doing is taking the opposite position in futures as you have with a call. So let's say that you sell 333 delta calls, okay? So it's a call, but you're selling it, so it's a negative delta. So what you're going to do is buy one future to hedge those three calls of 33, which add up to 1 delta. So, I mean, that's a little bit more advanced, but while they're doing this,
we could do a show on that. We could totally do a show on delta neutral trading. I mean, basically, when I was coming up as a market maker, that's all I did was delta neutral.
Yeah, that's all I did as well. I mean, you and we talked about this before. He was a long volatility, and I was short volatility, not in the same pit or anything, but we had exact opposite styles, opposite gamma scalping ideas.
Yeah, for sure. Well, I mean, for me, it always depended on what I was trading. I'm glad you guys can see my face muscles. Do I need to work any of them out?
No, we're good. No. We're good.
Please do not.
Supply and demand levels like Sam Seiden. I don't know who that is. Do you guys know who that is?
I don't. Interesting. Supply and demand
Your
levels.
Skin peeled off.
Oh God! It's like the scene in Indiana Jones in the Last Crusade when he drinks from the wrong Holy Grail and it just peels away. You chose wisely there. You chose poorly.
I exfoliated a little too much today. Does it look better? Is that better?
All right. So let's get back to the trade, guys. Let's put something on. So here we are. We can. Let's just make an assumption, and obviously it hasn't happened. Let's just assume price is going to go up and test this pivot support. Let's use the bottom. Let's use the bottom of this range as our stop. If we're wrong short. But once again, the idea being we want to be wrong small and right big essentially. And this is one of those areas where we can take a shot basically. We're trying to break through pivot range, and maybe it comes out and tests this level and then bounces. If it's wrong, we'll be wrong pretty quick.
Yeah, well, let's do it. Let's get a stop on.
Yeah, I like it. It's just fun to do.
The way you're talking about this sounds like you want to put in something now and then get a stop to protect it.
Yeah, let's just do it now because we're on stream, and obviously we would wait if we were watching this as a futures trader. The most important thing you can do as a futures trader, I think, is be patient and let trades set up. And what I mean by that is wait till you see those areas of whether whatever indicators you use, whatever setups you use, you have to sort of wait for them to happen. In this case, we're on stream, so let's just buy one, and we'll put the stop right below the bottom of the 3-day pivot, which would be, we'll just call it 87 even. Right now, futures are at 34.15, so we're risking almost 30 handles. Why don't we just do a big boy? We'll do a big boy. You can do a micro in your paper.
We'll do one big boy.
We'll do one big boy. So we're risking. Let's do this on the active. I love the active trader, guys. We're gonna buy one.
Let's get our stop built in there too.
Yep. So here's the thing. I'm gonna do this from the active trader. Let's make sure we are on GTC.
So we got Rage Loy says he's all in on the 420 calls in Tesla. YOLO, huh?
Lots of premium.
Hey, you know what? If it works out for you, great, man. But good luck.
Okay, so
I don't know.
I like the right meow though.
all right, guys. So we've got our
Yeah.
stop working. I changed it to GTC. So there you can see our entry level is 15 and a quarter. Our stop is down at 88. So if you do your math on that, that is 12 plus 15 and a quarter, 27 and a quarter handles. Each handle's worth $50. So do our math on that. We're risking about $1,400.
All right. I mean, that's a bigger trade than, I mean, that's on the bigger side that we do, but futures are bigger.
Yeah. Now the idea.
Yeah, so keep that in mind. So people who are new to futures trading, I'll just get it out of the way. So every single tick is $12.50. So every full point in ES is going to be $50. So when like the ES right now is up 80, so you do 80 times 50, that's $4,000 that you would have been up with one ES today, a long one ES, or down on one ES today, just based on today's movement. So it does move. There's a lot of leverage in there. That's why that especially speaks to Obi's point where it's like you got to be patient. You got to choose your spots and try and cut losers early and let winners run.
And guys, we're doing this in a paper money account. If you've never traded futures, don't just start trading futures. There's a lot of stuff you have to go through. It's a separate account. It's very risky and you have to understand what you're doing. But if you want to learn, you can always do it in paper money like we're doing. And one thing that I add to the active trader ladder is the PL open column, because that does the math for you, Bill. You can see the beauty about the active trader ladder, guys. I've always wanted to do a video on the active trader ladder. One, it tells you tick size. So you know immediately that this product ticks in quarters. It doesn't tick in pennies. And then more importantly, it does that math for you, Bill, where you can see every tick is going to be $12.50 as you go up and down. So if you look at where we placed our stop, there's that 1362.50, which I did with the calculator, but the platform shows you that. So it gives you an idea.
Show them the futures drop down in the top left there, because I think another important idea is the maintenance requirement on these. So the maintenance the initial margin requirement is what I should say technically. The initial margin requirement on these is usually pretty big. ES, because of the volatility, it's probably even higher right now. This is how much you need to have in actual like cash, essentially option buying power technically, that you need to have in order to get into one of these futures. So even if you are approved for futures, after you get approved for margin options approval futures, you still have to have enough cash to put up to buy one of these, which looks like ES is what right now, 13.2.
Yeah, we are in a demo account, so sometimes these numbers don't match up. So verify both on tdameritrade.com as well as your live account.
13,200.
Okay, so then that's correct. Just sometimes on our demo account, sometimes things don't match up on the live server side. So, but you can see, to Bill's point, if you don't have at least this amount to trade, you're not going to be able to trade this product. The Micro E Mini is 1/10 the size. So it would be 1,320, and then everything over here would be 1/10 the size. So instead of being up $100, we'd be up $10. Instead of risking $13.62, we'd be risking $136.25. So that's really the main difference between the micros. But keep in mind, with the micros, you're going to pay the futures commissions. In this case, they're the same whether you trade the micros or the bigs. So if we look at our cash balance, you're going to pay, so in this case we did the one lot, $350 per side. So we're going to pay another $350 to get out of this. If you're doing the micros, you're going to pay $350. So if you do 5 or 6 micros, that's going to be pretty commission intensive per contract. So keep that in mind.
This is true. All right, so we got our stop in. There's our ES. We've only got about, 6 minutes left?
Yep. And then what we'll do, guys, is essentially if we get that trend we're looking for, we're going to just slowly move this stop up. Like right now, we're already up, unrealized gain about $100, but we want to let this trade work and do that swing trade.
Mm-hmm. And that's what a lot of it is. Obi was talking about entry point, but being patient too. We've talked about this in the past when it comes to futures. you're almost never going to be right away. It's never going to be like you're going to buy a future and then it's going to explode 10 handles. That does happen, but it's very rare. So you've got to be prepared to give it a little breathing room to come down. That's why, it only takes the 13.2 to get into 13,200 or the $1,320 to get into one of these. But I think a lot of times there's going to be some oscillation, and you might have the right idea just at slightly the wrong time. So you've got to give it some breathing room. So it's not just the initial margin requirement that you have to worry about. You also have to be able to take a little bit of the heat so that you can see that plan come to fruition. Which when you're in a stock, I feel like it's not quite as dramatic. You're not like, oh God, I'm down right now, I got to get out. As it is in futures, because I think you do feel it because you're realizing that loss every night through mark to market. Whereas with stock, you may have a longer term idea. You're a little bit more comfortable with up and down with stock. Futures is a different story. So you want to make sure you have a little extra padding to let yourself be right if you are right.
Yeah, and the other point you want to make, Bill, is the initial margin requirement is just the skin that you have to put in the game to trade this contract, because it is a very large contract. Basically, take the current price, so let's just do 34.15, and you multiply it by the contract multiplier, which for the S&P futures is 50, and you're essentially controlling $170,000 of notional value. So that's where that leverage is coming in. That's number one. So if you are wrong, like in this case, initially we're up, but if by the end of the day we're down $500 on this trade, $500 will get debited from our account and will get taken out, because like you said, that mark to market, where with stocks, you don't realize your gain or loss until you close the position. Futures, you realize your gain or loss every single day. So if you were trading a one lot of S&P minis where you need $13,200 to get in the contract, you probably need at least $20,000 in the account to give yourself some cushion to be wrong before you hit any maintenance margin or margin calls. If you're trading a micro at 1,320, you probably at least want $5,000 in the account. You don't want to open a $2,000 account and then put on a micro at 1,320 and basically give yourself this much margin of error before you're blown out of your position.
Right. Definitely have a little breathing room, because I think there's a lot of oscillation in futures. I think it's a very technical market. So there can be a lot of that, but keep that in mind if you're thinking about entering it.
All right, we got 3 minutes left, guys. We only did one trade, so apologies for that. It's kind of turned into another futures trading episode. But I think from a swing trading standpoint, this is one of those areas where we're either going back down and we're going to fail and start a new trend, or maybe this is a point where it turns around and tries to retrace back to the all-time highs. Who knows? But we've got our stop in. We got it good till canceled. Doesn't guarantee we'll get out of that price, but with the futures market, it's fairly liquid. Yeah. And assuming there isn't a massive down move where we can get some slippage, we should be stopped out at or near our stop, maybe slightly lower. But other than that, we haven't gotten filled on our DIX position, and so we'll turn it back over to you guys. 2 minutes left.
Yeah, I mean, if you guys want to see another show like on futures and stuff, I mean, we could talk about this stuff all day. And we also had an idea about, delta neutral trading. So, maybe we'll, do something.
We could definitely touch on those moving forward. Let us know if you guys want to see anything else too. I mean, we're ready to talk. I mean, me and Anthony are ready to blabber for an hour, and Obi could do it too. I know that much.
Yeah, but he's just over there pushing buttons, really. That's all he's doing.
We went over this last week. I'm not here. You guys don't have a show, so.
Yeah, well, what happened to my face on this one? All my skin peeled off.
Your Skype was a little laggy, but is it Demigod? First time tuning in? Do you only go for 1 hour? We only go for 1 hour a week. We're as we get more viewers, which we're starting to see a trend. Then I can make an argument to my bosses that we need to be on longer, but the key is these guys have a day job. They're on the phones. They're working with clients all day. So the trade desk side of the business, they lend us Anthony and Bill for an hour a week. So hopefully we can figure out a way to do more content and more hours on Twitch. Until then, once a week, and then check out all the archives, guys.
Yeah, for sure. We'll take us through the markets, and then we'll get on out of here.
We're holding strong, even a little stronger, I think, than when we started the stream. We're at 34.17, up 86 on the SPX. The Dow is up 666 right now to 281.67. And the NASDAQ is 11,177, up 330. So even stronger still. I think we might be approaching the very highs of the day. So we're holding strong.
Awesome. Oh, well, thanks, guys. Thanks for tuning in. We have a few new followers there. Go ahead.
Yeah. Rift Boy Nick, 88 MPH. The rest at Amethyst and Erect. I think we already saw you, but
can I just say 88 miles per hour? That is a great play on Back to the Future, which
God. I love that.
I actually watched that the other day. It was on TV. They did the whole trilogy, and I think all three of the movies are on Netflix now. So
yeah, I can literally cite all three movies to you. I've seen them each like
miles per hour.
Oh, that's the best. But thanks, guys, again for joining us. And again, to your point there, no, only once a week for right now, 1 to 2 Central on Wednesdays. That's 2 to 3 Eastern. And we want to thank you guys for joining us. We want to get at least 1,000 followers by Christmas. I know we can do it.
We're at 913. I think we just picked up like 30 followers this stream. So keep letting your friends know, guys.
I think we had like 70 people watching at one point, which is great.
Yeah, I think that was a high. I think we probably had highest concurrent viewers today. I'll take a look at that.
Yeah, I think that I saw Bill stuttering and shaking his desk even more than usual.
Yeah, that was about regular. That actually might have been on the lower end. I'm not streaming all day. I shake this baby all day.
All right. Well, we appreciate you guys stopping by.
Thanks
was Hoctagon? I love that.
I kind of like that, yeah.
That's a Chicago guy, for sure. Go Hawks. Thanks for the follow. Make sure you guys check out all the great educational material on the website as well as Thinkorswim, and follow Bill and I on Twitter. Bill, your Twitter handle.
WRuby_TDA.
Mine is @Panzika_TDA. And again, all of these streams, guys, these get archived to YouTube and to Twitch right after. So we want to thank you guys so much for joining us again this week, and we'll see you guys next week. I'm Anthony Panzika. That's
Bill Ruby.
And we have Producer Obi saying so long, guys.
Thanks, guys. It's been fun.
We'll see you next week, guys.
Have a good one.